Good evening, everyone. Hope you're doing well. I finally get to do my year-end review of my stash portfolio. I've been waiting for this for so long. The whole reason why I started this portfolio was really because of you all, and I wanted to show an easy app to use that's cheap and that can get you decent returns. Now, again, in the past, I've talked about it before, Stash, you basically pay about $1 a month for their service. You buy ETFs. ETF is exchange traded fund. It's a collection of stocks. So, and they're particular to a sector. So, if you want to buy tech stocks, that would be like Apple, Facebook, Amazon, Google. If you wanted to buy defense stocks, that would be Raytheon, Lockheed Martin, General Dynamics. If you wanted to buy healthcare, it'd be like Celgene. Um, uh, goddamn, can't think of some, but like biopharmaceutical companies, health insurance companies, things like that. So they're particular to a certain sector. But I basically started this in January of 2017. So I did it for a full year, and I wanted to prove that anybody, really anybody, who could download this app, which is free, could make their own portfolio, maybe even their own retirement portfolio, invest to themselves, and not only get a better return, but also pay a lot less in fees. And that's the main thing that people forget about when they invest. They get someone to invest for them. They get someone through their 401k service. They get someone maybe through like pension plans or something because you're basically paying somebody to invest your money for you. And I'm trying to help people invest themselves and work for themselves, earn for themselves, and it's more rewarding that way. And in my experience, 401ks and IRAs, things like that, usually where you go to an outside person, you usually get like around 7%. It's kind of like the average, maybe a little more, maybe a little less, depending on the market. And they usually put you in some more conservative investments, that don't make much. They're steady, yes, but when you're in the stock market, you typically want to have a bullish sentiment because you want to make returns. Yes, the market does crash. Yes, corrections happen, but more often, since the stock market's inception, it's gone in an uptrend versus a downtrend. So you want to try to make those gains while you can because when the market's in a downtrend, it's going to be very difficult. But anyway, so going through this, so you see right here, my percent return is 15%. Now, I added two ETFs a couple days ago, so my end of year return was about 12.5 to 13%. So this isn't quite the exact number. The two investments I put money into are already paying me returns, so that's why it's jumped up to 15.5. But after 1 year, I was about 12.5 to 13%. I was kind of hovering around there. So that's double digit returns, which everybody should strive for when you're investing, especially if you're doing it yourself because you're saving money. Like I said, again, not paying fees. And two, like, let's keep it real. Like, if you want to retire, if you want to have money in your future, 7% a year, a single digit return ain't going to be much. And, a lot of 401ks, the companies can match pay, which is cool, but they usually match like 3%, which is nothing. They're giving you the bare minimum. And people think like, oh yeah, cool, they match or whatever. They give me 3% on top of what I do, and like it's unless you're putting in 10% and they're adding a 3%, you're getting 13%. You gotta do more to have a good retirement. I'm scared as shit about my retirement. I'm 30. I got a long ways to go. I don't got nothing, so that's why I'm going through all this, putting in the time, putting the effort, and then I'm putting out these videos. If anybody cares, like you can watch it. If you don't care, like do whatever. I'm not trying to force people to watch these videos. I'm just putting out there to see if people want help. And as always, like I said, like watch if you get into this, watch other videos and learn. It's going to benefit you tremendously. Everybody should know how to work their finances better. Everybody. But anyway, so going through this, my internet titans, one of my top performers in this is all internet stocks. As always, I got Amazon, Facebook, Netflix, PayPal, Alphabet, eBay, Twitter, so on and so forth. So all internet stocks. Internet stocks always get great returns. Tech stocks always get great returns. It's just it's the era we're in. It's the next age. We came out of the industrial age and we came out into the information technology age. And these are the companies that are driving innovation, creating jobs, That's why they're very high growth. A lot of these companies, what people don't like about these companies is they don't really produce a physical product, like a material, something material you can hold in your hand. You can't hold a Facebook profile in your hand. You can't hold a Google search in your hand. You can't, those aren't material items. So people don't see value in these companies, but the value is the leisure and information that they give to people. That's why they're valuable and that's why they grow so fast. Just keep that in mind. I know a lot of people have a hard time wrapping their mind around tech stocks and what they actually give in terms of value, but the value is the information. Like I said, we're in the information technology age, so that's why these companies are valuable. But if we want to look at this on a simple chart, just to see on Robinhood how it did in a year. I like using Robinhood because it just gives a straight up easy graph. Um, FDN. So on a 1 year, I got about 39.67. So 40% return. That's pretty good. Just on this one ETF alone, I got a 40% return in a year. That's really good. That's anything, like I said, anything double digits, you should definitely strive for. You need to strive for. Um, if you're getting single digits on your returns, that means you're getting a single digit total return of all your ETFs. And like I said, if you start like at age 18, 20, 22, whatever, that might be fine. But when we start getting up to age 30s and 40s and 50s and all that, single digit returns aren't going to give you your retirement. I'm just telling you right now. I see like friends and family going through it, and it's tough, and things are only going to continue getting more expensive. I live in the Bay Area. I live in a very expensive area, and just seeing people like not even thinking about money, like they don't even want to think about it. Like, oh, I got a 401k, and they literally don't know what's in it. They don't know how much they have. They're just like, whatever, and just it bothers me. Like, I don't like seeing people not being at least a little bit educated on their finances. They don't have to know everything. They don't have to obsess about it like me and be a fucking nerd about it. But like people just need to get in this. And that's why I'm glad I started this channel and like it's growing in subscribers and people because they want to learn. I'm throwing this out information out there for free. Do whatever you want with it. If it makes your life better, awesome. If you don't like it, you want to go somewhere else, get information, cool. Just do whatever you got to do to improve yourself. But anyway, getting way off track. So that's Internet Titans. So about 40%, really good. My next good one, Defending America. I know a lot of people ask me about this one because they can't get it in their stash. When you see if I can find it on here, when you do your account, when you do your settings and then your setup, they ask you certain questions. Basically, what's your risk tolerance? Depending on how you answer those questions, is going to determine which ETFs they show you. Now, roughly, I'll say 80%, maybe 90% of the ETFs I have, you might have, because I think for the most part they give you a lot of options. But for some reason, Defending America doesn't always pop up in people's ETFs. So you might just have to re-answer those questions to get this ETF. And it's a good ETF, and I would definitely get it. And I'm gonna explain why. But this ETF, what it has in it is Boeing, United Technologies, Lockheed Martin, General Dynamics, Raytheon, Northrop Grumman, Rockwell, Textron, L3, Arconic, all defense companies, right? And why defense companies are important is because I'm an American, living in the United States. We have an annual spending budget of about $600 billion on military expense. And I believe current administration I don't know if they're already increased it or they're trying to increase it to about 700 billion. So that's just $700 billion. That's just such a huge number. We spend a lot of money on defense. Not only that, we have defense contracts and we sell weapons across the world. So exporting weapons is one of our biggest businesses. So it's not only us as Americans buying these weapons, ships, planes, missiles, and all that. It's other countries buying our stuff. So this is our largest export, which is why it makes really good money and good returns. Um, and the kind of returns you get on this one, I think, is close to what the Internet Titans was. ITA, iShares Aerospace in 1 year, 34%, so a little bit less, but still like above 30%. Really good double-digit returns. This ETF started at 140, now it's at 190, so it's really moving up good. Um, of these two, the Internet Titans and the Defending America, those are my top two performing ETFs. Everyone after that is a little bit lower. but they're all still pretty good. But those are like my two favorite. Anything with tech and defense, just to me seems like it's making the most money. So, like I said, if you can't get either of those, redo your questions, your settings questions that you used to when you first set up the app, and redo them, maybe answer them differently or whatever, and then see if that'll give you the different options. And the whole reason why I bought this ETF is I knew when Trump Trump and Clinton were running, before the before the final vote, I knew they were both going to support the military. I knew Clinton was going to support the military, and I knew even though Trump was saying he wasn't going to support the military, just because he's running on a Republican ticket. In the past, Republicans have always supported the military more than Democrats, so I just already knew he was going to do it. Even though he ran saying he was going to be non-interventionist, and then just as soon as he came in, just flipped like right away. It's inevitable. Every politician does that. Every politician has that oh, what's the word? Like not pride, but like um it's almost like being an American means you support the military, like by definition. Like, and if you speak out against the military, people will treat you like you're not even an American, like, or you're a jerk or whatever. Like, heaven forbid, you question the military and what we do in other countries and we spend money on. But anyways, those two made the most money. Now, raw earth, my oil stocks, lately, these past couple weeks, oil's been jumping up. Um, but in this ETF, you have just all your oil companies: Exxon, Royal Dutch, BP, Chevron, Monsanto, so on and so forth. When you look at it on Robinhood, you get a pretty good return on it. In 1 year, you see about 25%, and you see in this U right here, it's really been coming up. Like if you even look at it on go on stockcharts.com, and you look at it. I mean, look at this right here. Oh wait, hold on. Get this ad out the way. Look at this right here. Look at this run up. This is ridiculous. Oil's been just spiking. It has been spiking. It was down here about 46, and now it's at 50. And you can even see on the RSI right here, it's way overbought. It's way overbought. There's gonna be a sharp correction coming soon. So if I were you, I probably wouldn't buy at this level. I'd wait for it to drop back and then buy into it. Like you see the blue line here, this is the 50-day moving average. Probably wait for it to kind of come down and around this level and touch this, and then it'll maybe jump back up. But for half of the year, you see on my Robinhood, it's been going sideways. Hasn't really done anything, and then just pretty much late June, it's been on a consistent run up. So it's finally be coming through, which is nice. And I bought that just because like oil's just it's oil. We're always gonna need oil. I wish we did more with solar. I wish we did more with like battery backup power and stuff like that. But oil is the industry we're in, so I just buy what works. Money machines, bank stocks. You got J.P. Morgan, Bank of America, Wells Fargo, Berkshire, Citigroup, U.S. Goldman, American Express, Morgan Stanley, Chubb. Um, VFH is the ticker on that. Let's see how it did. So that was 25% for oil, 20% for banks. So still double digits, still good. You kind of see in here, low early September, had a dip and then a big run up. And I bought banks because I knew the administration wanted to repeal like Dodd-Frank, which is basically protections for people wanting to invest and stuff, and making banks, be more accountable. So there's already repeal of that. And in the past, when they repealed Glass-Steagall, which was repealed by Bill Clinton, that was about 2000, and then less than a decade, the stock market ran up really high, particularly in real estate, and then we had the big crash, which we're still recovering from. People think that just because the stock market is back up, they think the economy is back up. That is not the case. That is not the case. Don't let anybody have you believe in that bullshit. There's like half the population doesn't even got a grand in the bank, which is like if of all those people lost their jobs, they couldn't afford anything. They can't afford medical. They couldn't afford to pay rent. They couldn't afford to take care of the kids. They probably couldn't even afford to eat. So the economy has not recovered. The stock market might have recovered, but the economy has not. But it's because financial institutions like this kind of put us in that situation. They were just taking loans left and right and not even really backgrounding checking people. They didn't care. They just wanted to get these loans out because they were assuming they were going to get a good return on their investment. And then of course, government bailed them out. And that was under Barack Obama, who was supposed to be a Democrat, and he bailed out the banks and other big corporations, which is kind of disappointing. But anyway, so that's the banks. And I'm still bullish on them though, because after the tax reform just went through, and like the corporate tax rate came down from like 30+% down to 20%. Like that's crazy. That's such a huge drop. So banks are going to continue doing good, lending that money around. So I'm looking forward to that. Like I said, I'm not happy with it, but I'm just betting on the money, and I just follow it. Live long and prosper, health stocks. This one was a little interesting this year. But in this ETF, I got Johnson Johnson, Pfizer, United Technologies, AbbVie, Merck, Amgen, Bristol Myers, Gilead, Abbott. And all these names you see in this list aren't all of them. This is just like the top 10 they kind of show. This actually ETF has a lot more. Like all the ETFs have way more. But you look at XLV, see what kind of return it got. For 1 year, so 22%. So another 20% is still double digit. That's good. And it's got more of a steady uptrend. You notice too. I like this. It's been steadily uptrending. But sorry, I got something in my throat. I was banking on the fact that the administration was going to repeal the ACA, Affordable Care Act, and it was becoming unpopular, and they were having a hard time do it. And it got to the point where they couldn't do it, which was very interesting. And I was sure once they actually repealed it, it would spike up, but they haven't done a full repeal yet. They did add some stuff in the tax cut that they just went through when I was talking about when they dropped the corporate tax rate and all that. Or they removed the individual mandate through the Affordable Care Act, so you're no longer required to, or you don't have to pay a penalty for not having medical insurance anymore. So depending on your outlook on that, if you're young and healthy, and you see why the hell do I have to pay for medical and I don't need it, that could be a benefit for you. If you're old and sick, you're going to lose out because those young kids aren't helping pay for insurance. That's how insurance works, FYI. Everybody pays into it and we all benefit from it. That's kind of how the game works. So when you don't have people paying into it, other people suffer. Yeah, you might pay more as a young person and not really get anything to it, but this it goes around in a circle because one day you're going to be that old guy and you're going to be saying, why the hell aren't these kids paying for insurance? Now my insurance is skyrocketed and I can't afford it, because no, they're not helping pay in. So the whole repeal of the individual mandate is kind of a big issue, but I was thinking there was going to be a full repeal, and I still think they're going to try to push that, but right now it's been very choppy. It's hard to get some stuff passed. All these votes I've been watching in the Senate are like split down the middle, like 50-50. It's ridiculous. It's so divided. Trying to get stuff done is ridiculous right now in government. But anyway, and like I said, when I originally made this portfolio, I did base it on the incoming administration and the things they want to do because government is the biggest spender, period. There's no one that spends more money in this country than the government. So whatever they're buying, I'm buying. Um, and then so this is where I changed it up. So I had Vox, which is my wireless wonders. I had to dump it. I'm keep it real. I had to dump it. I was being very bullish on it. I was hoping it was gonna bring up this year, but look at this chart. It's sad. It didn't do anything. Not like a lot or anything, but like it just kind of went sideways. And I thought because they were gonna repeal net neutrality, it would give it. Turns out that's not the case. You look at it on a 1 year chart. Let me just look at this thing. Like when I bought it, it was like up here, and it's just go down, 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 down. Now when I sold it, it was right about here. This last little spike in October, and then it just kind of went down and sideways. Now it looks like it's trying to build this bridge right here, or kind of go sideways to build like a step, some support, and it might still go up from here, but I'm not going back into it. I'm done. I've just look how long this has been going down. I made no money on it, so I made money on defense, wireless wonders, banks, um, oil, and healthcare. So five of my original six I made money on. I got double digit returns. This one I got -9% for the year. So not bad. I had five good picks out of six. And now I added in three new ETFs for this year. So I wanted to kind of add a hedge um, to my portfolio. So I bought Essential Europe. So basically Europe stocks. Um, So, in this stock, just it's just all European companies. Description: the European economy is diverse as the landscapes, languages, and people who live there. This investment covers it all, from chocolate to healthcare and baking to beer. If it's a masterpiece of European innovation, you'll find it here. So you got Nestle, Novartis, HSBC, Roche, British American Tobacco, BP PLC, Total Essay, Royal Dutch, Banco, and a bunch of other ones. And this is VGK. So just to play a little bit, let's see what I would have it at if I bought it at the beginning of the year. So I only bought it, maybe only held it for like a little less than a month. So I've had like a little 2-3% return, like you saw in my stash. But over a year, at a 28% return. So it's a pretty good stock past the year. Now, like I said, I didn't buy it at the beginning of this year. I wasn't thinking about this kind of stuff as I go more into my portfolio and I learn more and I evolve and stuff like that, I think about these things. So I'm glad I added it now this year, especially with like a lot of the craziness that goes on in the government. But this is my hedge against all the stocks that I have are like that are basically American stocks, like my defense stocks, my healthcare, my bank, and all those are mostly American companies. So if the American stock market, American economy goes down, most of my portfolio will probably go down. So I need stocks on the outside of that to help me that. So that's why I bought this ETF as just kind of an extra little hedge against that, just in case. But I do like Europe. I do think it's a good economy. I was debating because in this ETF you can also get, I mean, in this app you can also get two other ETFs outside of the US. You got Pacific Powerhouse, which is innovative Japanese companies take center stage in this investment. Look further and you'll find the banks of Hong Kong and Australia. This investment includes powerhouses companies from the developed economies of Asia Pacific. So it's kind of looking at that one. And then also up and coming, it says, what do China, Taiwan, India, and Brazil have in common? Rapid economic development. This international investment includes emerging economies that span from Latin America to Africa, Europe, Asia, and the Middle East. So another good one. Both of these, if you look at the performance, here at the bottom had a 30% return. And Pacific Powerhouse also had a 27% return. So these foreign ETFs are actually having a pretty good return this year. So that's why I kind of wanted to jump in one. I chose to go with Europe. I wasn't sure about China because this up and coming because it has China in it because we're kind of going as an American we're going back and forth like in a little economic war with China. So I didn't know how that played out. And then the Japanese and Australia one I just wasn't sure. So that's how I kind of chose Europe. I just thought that might have been the best pick. Um. Anyway, sorry I'm getting over cold, but I really wanted to get this video out because it's already 2018 and I'm lagging. So I also added two more. I added robots rising in social media. Now I'm getting tech heavy in this portfolio by adding these two because I already have my tech titans. But when I looked at these ETFs, I saw the returns. And if you look at the overview, you have iRobot, Oceaneering, IPG, Crohn's, Rockwell, ABB, Holistin, all these other ones. If you look at the returns, I had a 44% return. That's really high, better than anything I have. If you look at it on Robinhood, just to see what it gets for like the year, I do like doing 1 year charts just to give a good idea because I make like year long investments. So, wait a minute. There you go, 48% even in 1 year. That's almost increased 50% in 1 year. So that's really good. Um, and again, it's tech. People really love tech, and I don't blame them for that. I love tech, and when I bought into it, let's see if I can bring it up on the chart. Um, I bought this like kind of dip right in here, like I want to say right about here, but this it was kind of riding the 50-day, as you can see. It was hovering for a minute. It wasn't even coming down to the 50-day. Then it finally hit it, and it came down, and that's about where I bought it. And it's already like popping back up. So I think I got it at a good buy. But the RSI is kind of coming up here to the 70, so it might go up a little bit more, and then come back down, as you can see on these other or earlier days. It got into the green a little bit, then it came back down. And then the last one I added, which I think is like probably one of the best performing ETFs this past year in this app, is Social Media Mania, where it had a 57%. Oh, sorry, I'm gonna bring it up. 57% return. That's really good. That's really good. And this has Twitter, Tencent, Facebook, Snap, NetEase, United Internet, Alphabet, and a few others. I was a little hesitant on this one because some of these companies look similar to what's in my Tech Titans, but this total return is obviously way better than I was getting in my Tech Titans. So there's a few other things in here that are really giving it these returns. Um, and just to see what that looks like on a one, yeah, 59.74. That's pretty damn good. Um, like I wish I bought both of these at the beginning of the year because they had the best returns, but I wasn't really following them. I kind of want to make my base portfolio and stick to it because I wanted to show people, watching this channel, make some good picks at the beginning of the year. And it's still, if you still want to get into this app, I mean, you can get into whatever, but I feel like it was easy for me because I started in January 2017. I just basically did a full year. That was my 2017 portfolio. And I showed at the beginning basically what it came out to be. And, if I would have got these ones, I probably would have got better returns. So I'm adding them now and seeing how good they can go or how far they can go. But, and look at that, on a 5 year, you get 162% return. That's so crazy. I don't know what happened in January in the beginning of the year, but it man took off from there. But when I bought this one, it was at this little kind of little dip here. I think I actually bought this red candle right here, if I remember right, because it took a drop, and I was like, that's so close to the 50-day, but I don't know if it's gonna touch it or not. So I put in my position there. And I saw what happened, and the next day it just shot up. So I got that was a good play right there. But this one hasn't been hovering above the 50-day as much as the other one. As you can see, it comes down to the 50, kind of touches, goes up, down to the 50, goes a little below it, comes up, hits the 50, touches it, goes below the 50, up. And then I was thinking it was going to go below it. That's why I was like, I'm just going to buy here. If it goes down a little bit more, that's fine. But like if it touches, it'll shoot back up. But it actually came right back up the next day. So that's basically my 2017 portfolio plus three new ones to add to my 2018, basically just touching it. So I'm getting rid of wireless wonders. I'm done with it. I'm not going back into it. I got nothing out of it. I lost. No problem admitting that. I'm cutting my losses and I'm moving on. I held as long as I could, you know. So, but with my returns, I got about a grand, I'd say, a little over a grand that I invested myself, and I have about a $200 that I made on this portfolio, which is decent. When I did my Robinhood with my individual stocks, I think it was in 2016. Yeah, it's 2016. Um, I had total invested 3,000, and I think about 400 to 500 of that was my gain. And plus, since it's Robinhood, you don't pay fees. I saved about $300 on fees. So really, like I got a big return on that one. It was really good. But because with Robinhood, you buy individual stocks, if those individual stocks really run up, you can make a higher return. But of course, if they shoot down, then you could lose a lot of money. So just keep that in mind. That's why I really like this this app, ETFs. You know, it's safer. It's a lot similar to like mutual funds, which a lot of people like and are popular because it kind of gives you a good range of the market and different things, and it keeps you safe. The only thing with mutual funds is you're paying somebody for it. You know, you're paying for them to monitor, you're paying for them to move money around. You know, you every time they do something, you know, it's a fee or whatever. ETFs are like the much cheaper, more affordable way to do it, but it's on built kind of on the same premise. But in the stash app way, you know, you're running your portfolio. You know, you're not going to anybody. You're not going to Scott Trade. You're not going to TD Ameritrade or whatever. You're not paying somebody. You're doing it yourself. And you know, I've proven with this portfolio, I can beat the common um like 7%, 7 to 10% that usually people get. I get a little higher than that. And plus I've saved way more money because I haven't paid anyone a fee. I paid $12 basically for 1 year for this app pretty much, you know, like that's a huge savings. But the whole goal of this is to get people watching. You know, like I said, I basically built this portfolio for everybody watching, like how to try to be a little diversified. You know, I got tech stocks, defense stocks, oil stocks, bank stocks, health stocks, and then I had telecom stocks. You know, now I'm adding European stocks. The only two that I would even criticize myself for is adding more tech by having robots and social media, but we're giving such good returns, it's hard to ignore, you know? So I don't want to add any more tech stocks other than these two. I might add, I'll add a little bit more money to these two when they on a pullback, but you know, I'm really tech heavy in this portfolio, but I really like tech. You know, I live in the Bay Area, so I'm surrounded by it. But I might try to add either the Civic Powerhouse or Up and Coming because that's another two ETFs that could spread me out in other markets and kind of hedge my portfolio better. But for right now, I'm just going to leave those alone. I'm not going to do anything with them. I'm going to keep this for a little while. But anyway, so that's my 2017 portfolio. Like I said, I built this portfolio for a 4 year term, a 4 year presidential term. Like I said, it doesn't matter to me if Clinton would have won, Trump would have won. I just built this based on the promises that they were making and how they were going to run their administration and what would profit for me the most. So I think I did okay. I could have done a little better. Obviously, I could have made better decisions. I probably could have cut my telecommunications ETF out sooner, but I was holding on to because I was waiting for that vote on the FCC for the repealing net neutrality. But it took almost a full year for it to come through, so I was in way early, which happens sometimes. Sometimes you get in early and you hold for so long, and then you're like, nothing's happening. So you get out, and then a week later it shoots up, and it's like, fuck. So it happens. But so far that ETF hasn't done a crazy move without me, so it looks like it's just trying to build support, and it might go up a little further from there. But anyway, so like I said, please take this to heart. Like investing is important. I don't care. If you don't know anything or if you know a lot. If you know more than me, great. If you don't know anything at all, that's great. This is an opportunity to learn. This is for your development. This is for your life. This is for your retirement. This is for your health. This is for your kids. This is for your family. If your parents are retired, you want to help them pay bills or something, or if they need something, like being financially secure is powerful. That's a powerful feeling. And I don't have that. I see people around me that have that, and I'm envious of it. I want that, and I'm trying to work towards it. No one's gonna give it to me. I have to earn that shit. So giving out this information is my way of like trying to my own version of philanthropy, where I'm not perfect at what I do. I'm growing, but I'm not ashamed or afraid to show what I'm going through because it could benefit from somebody. Because it's hard when you watch people that are just so successful and so rich, and you just have no clue how you can attain that because the gap from here to there is enormous, and you don't know how to elevate yourself to where they're at. So seeing someone who's like a lot lower to where you're at, maybe only a little bit farther ahead of you or at that same level, maybe a little behind you, whatever, it's like a good way to kind of build momentum build confidence in yourself and get educated. So I'm glad that there's way more people than me that do this kind of stuff. I was inspired by other YouTubers that made videos, and I hope it inspires other people. And like, share your information. If you got some knowledge, the internet's open and free. That's what it's there for. So hopefully people will gain something from this and learn. Anyway, I think this video is getting pretty long. So again, happy new year. 2018. I hope it's going to be a good year for all of us financially. Keep investing. I'm going to update more videos. I'm basically having three to four different types of videos now. I have my day trading, have my stash ETF, I have my Coinbase, which is my major cryptocurrencies that are more common, like Bitcoin and Ethereum. And then I'm just getting into Binance where I'm buying altcoins, which are smaller coins. And I'm already showing some pretty good returns on those. And I'm going to make videos in the future to keep you guys up to date. But anyway, I hope you all have a good time, have a good weekend. And as always, just keep at it. Don't let anybody tell you you can't do it. People always gonna like talk shit or whatever. Just keep at it. Keep working. Keep investing every day, every week. Keep learning. Don't stop. It's just the only person gonna take care of you at the end of the day is you. Even if you're married, like you just never know, and you should be more financially secure because I, in my opinion, will improve your marriage, will improve your life because if you're both financially secure, one of the main things couples always argue about is money. Let's keep it real. So being more financially secure is definitely a benefit. So it just helps everybody. But I'm making this video way too long. But anyway, I hope this was helpful. As always, keep giving me comments. I'm gonna try to make more videos, be a little more consistent. I know I've kind of fallen off a little bit, but I'm gonna get back at it. So I'm gonna say good night and cut this off finally.